All right, we are live. Hello, everybody. Happy 5th of July. I don't know if you are working or if you decided to take the rest of the week off, but I hope that if you are in the US, you had a wonderful time off yesterday. Middle of the week holidays are so interesting. But we're back at it, and I am here. Hello, my name is Tess. If you don't know me, I am a financial coach for millennial women or women in their 20s and 30s, and I'm also a content creator over at wanderwealthy.com, where I create content and courses, videos, podcasts, blogs, all about our favorite subject, personal finance. Today, I'm going to share something that I love to talk about, which is business finance, actually, because we're going to be talking about how to prepare yourself to transition from a W-2 9-to-5 job into a self-employed career, and the financial things that you need to know about that, as well as some of the other non-financial things. So I have 5 tips or 5, I guess, categories that I want to talk about. And they're actually kind of reflecting something that you, so to speak, lose when you leave a 9-to-5 or W-2 contract job and you start working for yourself. Now, these also would totally apply to you if you are going from a W-2 contract to a 1099, maybe you're an independent contractor and you're still going into your 9-to-5 job, but you have to live a little bit differently and run your own business. Even if you feel like you have a job, you're technically running your own business. So these tips will still very much apply to you. So I have 5 main topics that I want to cover, and then a couple miscellaneous things that I just think are really important. And I think I mentioned this, but most of them are money related, but some of them aren't, because I'm a big proponent of, making sure that we're still talking about other things that also happen when you make this transition and how it could potentially impact your finances. So some kind of lifestyle changes that could have a direct impact on your money, as well as your money having a direct impact on your lifestyle. So let's just dive right on in. If you guys have any questions, you can comment them as you're watching live. I'm going to start with the number 1 thing, and this is where we get right down into it. So like I said, I'm talking about the things that you might lose when you leave your W-2 job that you need to consider now that you're being self-employed. So the number 1 thing you're going to lose, or the number 1 thing that is no longer going to be offered to you, is a predictable and steady income. So there's 2 things that you need to make sure that you have in this first category in order to help you with the fact that you are no longer going to have a predictable or steady income. And this is for most people who are transitioning to a self-employed work life. Some people do have some more predictability than others, but for the most part, especially when you're starting out, the idea of getting a regular paycheck is no longer going to come every 2 weeks or twice a month or once a month or however often you get paid. So the 2 things you really want to make sure you do have is, first, an emergency savings fund. Now, everyone needs an emergency savings fund, even if you do have your 9-to-5 job. But unlike an emergency savings fund for a 9-to-5, you might want to have an even stronger emergency savings fund just in case, because the risk that you're taking by not having a predictable income means that you're going to need more money to cover you if something happens. So most people will say, and I think that this is up for debate and you just have to figure out what is right for you, but a lot of people say the standard emergency savings fund target that you want to aim for is 3 to 6 months of your monthly fixed expenses. So you would consider, how much does it cost for me to live that is basically my necessary cost so that my standard of living doesn't decrease. So for me, that would be things like the rent of the place that I'm living in, or my mortgage, the utility bills, maybe the average I spend on groceries and gas every month, and insurance payments and any other kind of debt payments that are required to pay. So those are kind of the standard, fixed, and a little bit additional when we talk about food and gas, but those are your necessary expenses. So whatever that is, figure out that monthly amount, and then you multiply it by 3 or 6 months. Now, this is for a regular W-2 employee who has a fairly predictable income. If you're self-employed, I try to aim for 6 to 9 months. And the reason is because yes, your emergency savings fund needs to cover you if you get a flat tire. And that could be, $500, which is great. I mean, it's not great, but it's a pretty small amount compared to another reason your emergency savings fund might come in handy, which is if you lose your job. Now, if you are in the workforce, you can kind of decide how long it's going to take you to get another job, and then you can kind of figure that out and determine how much you really do want to have saved. But if you're self-employed, we need this emergency savings fund for the fact that we might get sick and then we don't have a job that might have, a form of disability coverage, or we don't have a job to just get right back into because you are fully responsible for your own income. So that's why I always argue that you want to have a little bit higher emergency savings account, the balance in that account, because it can really help you out when the going gets tough. Now, the other thing you need to have to kind of ease yourself from this unpredictability of your income is a buffer account. And some people might just roll this into their emergency savings account, but I love the idea of a buffer account, because when you are transitioning from W-2 regular predictable income to self-employed, your income will likely be ebbing and flowing. And one month might be really high and you might make way more than you even need to live off of, and other months you might not make any money at all. And so how do you stay sane, and how are you able to just budget your normal life if your income fluctuates so much? And that's where this buffer account comes in. So it's not an emergency savings fund, because it's not like you got a flat tire or your car broke down. It's not like you need to pay for this medical bill or you got really sick and now you don't have an income. It's more of just that account that's there to help you out when you have bad months here or there. Hi, Richard. So you build up this buffer account, and the best time to do it is when you do have really good months. When you have really good months and you get more than you really need, you can start putting that money into that buffer account. So then when you do have a month which doesn't pay you as much as you really need to live, you can pull from that buffer account, and you just keep adding to it and taking from it, because it's there to supplement your income when those months that are dry come along. So those are the two big things that can help you with this lack of predictability in your income. And they're so important that I recommend way before you even consider leaving your job to start building up these savings accounts, because the best time to save money is when you have predictable money coming in. Okay, so let's move on to the second thing that you lose when you leave your 9-to-5 W-2 job, and that is all the things that come out of your paycheck, which seem bad, but they're actually good for you. The biggest thing is taxes. You lose the tax withholding, which to most people is like, that's great. Now I get paid all that money. But what a lot of people do, especially when they're just starting out, is they forget that they need to save and then pay taxes on a quarterly basis. So I'm not going to get into the nitty-gritty here, but it is so important to remember that how much you make as a self-employed person isn't how much you get to live off of, because you have to pay taxes, you have to pay your business expenses, you might have other things like health insurance, which is something you'll lose if you do leave a job that did provide health insurance. And these are some big costs or big items that when you work for a W-2 employer, they're going to take care of those things for you, so you don't even have to think about them. But when you go into work for yourself, it's really important to make sure that you're setting aside money for Uncle Sam, because that money isn't yours in the first place. So I just like to set up a separate savings account and take a percentage of the money I get paid and just set it aside and then pay out my quarterlies as I go through the year. But you can do it how you want. I would definitely recommend talking to a tax advisor or a tax accountant, and they can help you out figuring out how much you need to set aside. So taxes, and then the other one I mentioned is health insurance. And I just mentioned this because it can be a really big part of your monthly costs. And that's something that maybe your employer used to cover, which they are not going to cover anymore. So there's kind of a 2B to this part, and that's just the fact that when you are self-employed, as I mentioned, how much you make from maybe your clients or your customers isn't how much you get to live off of, but you need to figure out how much you do need to live off of. So it's really important to sit down and set that budget. Now, you probably already did this. If you already covered figuring out how much you need in an emergency savings fund, then you already know how much you need from a fixed and necessary living perspective, but what about all the other things you want to do? So what does your salary cover for you now, today? It doesn't just cover your necessary fixed expenses. It might also cover some discretionary spending, like going out to restaurants or going shopping or going on trips. You also probably save for retirement or save for other goals that you have. And then maybe you're paying off debt and you're also putting additional money there. So you wanna make sure you can sit down and go, okay, how much do I need to live? But also how much do I wanna save, pay towards my debt, just have extra money for fun, because we all deserve to have a little fun too. And that's when you figure out how much your business needs to be paying you. And then on top of that, you need to remember that your business also has to pay taxes. It also has to pay expenses that are business expenses and not personal expenses. And your business might want to make a little extra money on top in profit. So considering all of that stuff, the amount of money you need to bring into your business might be a lot more than the salary that you're getting paid from your job, because it costs a little bit more money to run a business. So before you leap from your W-2 employer to a self-employed position, you might want to sit down and do the math and figure out, when am I really ready? And it might be that you're doing that calculation, and when you get to the income level where you're able to cover taxes, your pay, as well as business expenses, that's when you know, okay, I'm in a good position where I can transition out and still live comfortably. So the second topic, where you lose these tax withholdings, you lose your health insurance benefit, and you also lose the fact that your employer is paying you that paycheck, you need to make sure that your business can cover all of those things. Okay, let's move on to the third thing that you lose when you go from a W-2 to self-employed, and that is retirement benefits. And there's a lot of other smaller benefits, but I'm really just focusing on the big ones that I think make the biggest impact for us. So retirement benefits, if you have an employer and they're saving in a 401k for you and they have matching contributions, well, you're probably going to lose those. You are going to lose those. You still have your 401k account and however much you saved into it, and you're going to need to figure out what you want to do with that. So this is a two-part topic as well, because first we're going to look at what are you going to do with your current 401k and your old employer's account, and then what are you going to do about retirement in the future. So first you might want to consider, you could either leave your 401k with your old employer, or you could do a rollover into an IRA, and you can talk with a financial advisor or other financial professional about getting help with this. You can also look towards a brokerage and opening up an account for yourself, and then talk to the HR people at your job and figure out how that rollover would be administered. But you can do that so that you can manage your 401k in one spot. So if you had many previous employers and many previous 401ks, you could roll them all over into one single account and manage it that way, or you could just keep it all in the older accounts, but it can be harder to track. So that is the first thing you might want to consider when you're doing this transition is, what are you going to do with your retirement accounts? Are you going to bring them and merge them together so you can keep track of them, or keep them all in their separate accounts? And there's benefits to doing both. You might have a great 401k provider through your old employer. Now, you're not going to be able to contribute to it anymore, but you might want to keep it there for some reason, or you might want to roll it over. And there's, like I said, benefits to both, but that is a topic for another day. The other thing you want to do with retirement is set up your own retirement account, because now you're no longer getting that benefit from your employer, which is really nice. When you have an employer, they've kind of set this account up for you. All you have to do is elect to be in it. You have to contribute part of your paycheck. They take care of it every month. When you're self-employed, you need to figure out what you're going to do. And you can absolutely automatically allocate money into a retirement account. And you can do it through an individual retirement account, a Roth IRA, or a standard IRA, or you can set up a self-employed account. So a SEP IRA, a simple IRA, a solo 401k, it just depends on what you're looking for. And again, I don't want to get too deep with this. I just want to make sure that you are aware of these options for you, and then you can kind of go and do your own research on that. But it is important, if you are trying to also save for your future, and your future self will thank you if you do this, to make sure you look into setting up one of these accounts and you're saving there as well. So like I had said earlier, you don't just need income so that you can live and pay for your current expenses. You also need income so you can invest in retirement and pay off debt and do these other things that you want to do in your life. So retirement is covered. You want to make sure you set up those accounts, whatever ones you need, and make sure you're managing all of that, because it's no longer being managed under your previous employer. The fourth thing that you lose when you leave your W-2 and join the self-employed workforce is structure. Now, this could be up for debate, but I think that we have been kind of bred into this world of a lot of structure, from going to school and being in the school system to joining the workforce. You have to be at work at a certain time, leave work at a certain time. People are in general telling you what to do, and our lives are pretty structured out. But when you leave, you kind of lose that structure. You don't necessarily have a place to be every day at a certain time. No one's telling you when to be in specific meetings or some certain places. And so you really need to make sure that you build that structure for yourself. The reason is because I don't think anyone operates very well, very productively, efficiently when they don't have structure. And it doesn't have to look like the structure that you left, but you have to have some structure that ensures that you're going to get your work done and not, feel the need to do the dishes all the time or procrastinate on a project because no one's holding you accountable to a deadline. So this isn't a money-related topic, but I think it's really important because it can determine your success in your own self-employed endeavors, and that obviously has an impact on your money. So it is important to build some sort of structure around yourself. So that's whether that's setting working hours for yourself or going to an office space, whatever it is that you need to tap into that. I know when I left my 9-to-5 job and entered the self-employed workforce, I had to wake up every day and, put on clothes and get out of my sweatpants or my PJs and put on my real working clothes and leave the house and go to a coffee shop. And that meant once I got to the coffee shop, I was ready to start work for the day, because it's really tempting and it can be easy to instead fall into waking up, staying in your pajamas or your sweats and, doing the dishes and cleaning the house, especially if you work from home. So figuring out what structure works for you is really a very good idea. Even if you are a very structured person, it tends to be this kind of anti-structure shock when you leave that 9-to-5 structure. Okay, the fifth one is another non-money one, but the fifth thing that you do lose, or you might lose when you leave that W-2 job and enter the self-employed world is camaraderie of your coworkers. So it's always good to surround yourself with people who understand what you're going through. But when you leave, you end up losing that camaraderie because you no longer have coworkers. You might have coworkers, but maybe you aren't in the same place. And it just depends on how big your team is. But if you're self-employed, you likely don't. What I like to do to help myself with this is I actually have virtual coworkers. If you just heard my ping, it's because I just got a message from one of my virtual coworkers. And we like to keep each other on task and keep tabs on each other throughout the workday. So we'll have standing meetings, and we don't necessarily talk about, we aren't relying on each other for work, but we do work kind of in the same realm or the same industry or with the same business model, where we can discuss projects that we're working on. We can complain if we want to complain. You always need that coworker that you can vent to, and you can also discuss things that maybe you can hold each other accountable for, and that can really help you out. So I love to have virtual coworkers. I also love to have local coworkers. So coworkers that we don't necessarily work together on the same business, but we go to a coffee shop and we work together, or we go to a co-working space and we sit there and we kind of hold each other accountable just by being there, and that adds that structure that you are also missing. So I think camaraderie is really important because it can keep you sane. Self-employment can feel very isolating, and it can be very isolating, and it's important to make sure that you know that there are other people out there that are going through similar things, and they can be great mentors for you or just good people to vent to. So those are the 5 main things that you'll lose when you leave that W-2 9-to-5 job and enter that self-employed world. And I think that they all have an impact on your money. And some of them are super tangible tips, and some of them are more just looking at your lifestyle and how that could impact your ability to make money, or maybe your desire to spend money, your ability to budget, and so on and so forth. Now, I said I had a couple of miscellaneous tips, and I just think that these are really important, but they don't really have anything to do with losing anything from leaving a W-2 job. They're just additional things that you'll want to make sure you have in place when you do enter the self-employed world. So the first one is you're going to want to do some research on business structure. And this is probably something that if you are looking to start your own business or start being an independent contractor, you're thinking about, well, I must have to incorporate or get an LLC. And I think that this can trip a lot of people up. Again, I'm not going to dive too deep into this, but you can just consider what your options are. And for me, when I exited the work 9-to-5 world and entered self-employment, I was just a sole proprietor. And that could very much be just all you need as well. You can still be a business and run a business under your name as a sole proprietor, and you can still do all the business things you need to do, but your business is yourself. You can also do an LLC, and you can get taxed as yourself, or you can choose to be taxed as a corporation, or you can do incorporate and be a corporation. And there's a lot of little nuances that go into this, and I highly suggest building yourself a team of professionals that you can talk to, and they can help you figure out what is the best for you. So find an attorney, find a good tax advisor or accountant or bookkeeper, or all of them, and ask them what they would recommend for you, because they have the insight. They can help you make that decision. And I think I mentioned this, but we tend to get tripped up on these really small decisions when we are building our business or going into self-employment. And those are the small things that aren't going to have the biggest impact. What is going to have the biggest impact is having that structure and being able to go out and be productive and commit to the work that you've set out for yourself. The second thing I wanted to touch on is having a business bank account. So whether you're a sole proprietor, LLC, corporation, you can have a business bank account, and it's so important to set that up. because when you get paid, you're going to need to save for taxes, but you're also going to have business expenses. And you really want to avoid paying for business-related expenses on your personal credit card, because for tax reasons and bookkeeping, it's so important to keep those expenses separate. So if you can get a business bank account, then you can also get a business debit card as well as a potential credit card if you see fit to want to use a credit card. But that's a really good way then to be able to organize all of your expenses and keep your books really nice and clean. So the last thing that goes along with business bank account, debit, credit card, and those expenses is a bookkeeping platform. Now, you can do lots of research on the best bookkeeping platform out there for you. You could also just have your bookkeeper decide if you choose to go with a bookkeeper, but you can also, if you're starting small and you're not quite ready to work with a bookkeeper, you can keep your own books. And there's many platforms out there that are super user-friendly, and it is really important to make sure that you are keeping your own books and you understand what is coming in and going out of your business. So I definitely recommend finding a bookkeeping platform that you're going to use and start managing all of those expenses, because not only is it good for tax purposes, which will be wonderful come year end when you're sitting down and trying to do your taxes and maybe pulling your hair out, but it's also good just to look at your business's financials and see the reports and see how you did throughout the year. So I like to include those. Those are things that you don't even have to consider when you are in a W-2 contract job, but they're so important when you do become self-employed, even if you're an independent contractor, because now you are responsible for your own taxes, you're responsible for your own business-related expenses, but there's definitely some perks to that as well. So just make sure that you have a good team. You find some great professionals, attorneys, accountants, bookkeepers, tax professionals that can help you run your business efficiently. And you can definitely try to DIY it for the first couple of months, but once you start making money, you're going to really want to make sure that you have the best minds on your team. So it's a really good idea to invest in those people. So to recap, the 5 big things that you will lose that you need to make sure that you have when you do make the transition from W-2 to self-employed is, first, you lose that predictable income. So get yourself an emergency savings fund that's topped up and extra ready for being self-employed, and a buffer account that can help you out when those months dry up, because sometimes they do. The second thing that you lose is tax withholding and health insurance and other business expenses that you don't even realize you're going to need when you're self-employed. So make sure that you're setting aside money for taxes. You can do this in your business bank account. And you're also considering the fact that it's going to cost a lot, or you're going to need a lot more money in income in order to live your life, but also pay taxes and pay business expenses. The third thing that you will lose is retirement benefits. So make sure you take care of your old employer's retirement plan. You have that organized and you have control of it, and also set up yourself a retirement plan for your new self-employed life. The fourth thing is structure. So figure out what kind of structure you're going to work in and commit to that. And then the fifth thing is camaraderie. Find those virtual coworkers or those local coworkers and start looking. I mean, Facebook is a great way to find virtual coworkers. Conferences are another great way. Also, meetup groups within your town are a great way to find those local coworkers. So put yourself out there and find the people that can help you out and mentor you, but also just hold you accountable and help you get your work done. So that is all I have for you today. I hope you enjoyed this. And if you want to see and hear and read more from me, you can come to wanderwealthy.com, check out the blog, podcast, and all of my videos and free courses. And until next time, I hope you guys have a wonderful rest of your holiday week. Soak it up as much as possible, and I'll see you later. Bye.